Most people think investing is only for rich people. They imagine you need thousands of dollars, a fancy suit, and a Wall Street office before you can even get started. But what if I told you that just $100 could be enough to begin building wealth? Not 1,000, not 10,000, just $100. In fact, many successful investors started with far less. And thanks to modern investing apps, starting has never been easier. Today, I'll show you exactly how to start investing with just $100, even if you've never invested a single dollar before. One of the biggest myths in personal finance is that investing requires a lot of money. Years ago, that was somewhat true. Buying stocks often required large amounts of cash and expensive brokers. But today, many platforms allow you to invest with as little as $1. That's right, $1. The real challenge isn't having enough money. It's getting started, because every day you wait is another day your money isn't growing. Before investing, let's clear up one thing. Investing is not gambling. It's not trying to get rich overnight. And it's definitely not buying random cryptocurrencies because someone on social media told you to. Investing means putting your money into assets that can grow in value over time. Think of it like planting a seed. You don't dig it up every day to see if it's growing. You give it time. The same applies to investing. Before investing your first $100, ask yourself one question. Do you have emergency savings? If your car breaks down tomorrow, or you suddenly lose your job, will you have money available? If the answer is no, consider putting part of that money into an emergency fund first, because investing is for long-term growth. Emergency funds are for short-term surprises. Both are important. Once you have a small safety cushion, it's time to open an investment account. Today, there are many beginner-friendly investing apps. Most allow you to buy fractional shares. That means you don't need enough money to buy an entire stock. Instead, you buy a small piece of it. Think of it like owning one slice of a giant pizza instead of the entire pizza. Now comes the most important decision. What should you actually buy? Many beginners think they must pick the next Amazon or Apple. But even professional investors struggle to predict future winners. That's why many experts recommend index funds. An index fund owns small pieces of hundreds or even thousands of companies. Instead of betting on one company, you're investing in the entire market. If some companies fail, others may succeed. This reduces risk. Here's where investing becomes powerful. Let's imagine you invest your $100. Then you continue adding a little money every month. Over time, your investments generate returns. Then those returns begin generating their own returns. This process is called compound growth. It's often called the eighth wonder of the world, because small amounts invested consistently can grow into surprisingly large amounts. When starting with $100, avoid these common mistakes. First, don't chase get-rich-quick schemes. Second, don't invest money you'll need next month. Third, don't panic when the market falls. Markets go up. Markets go down. That's normal. Successful investors stay focused on the long term. If you're completely new, here's a simple example. Take your first $100. Invest it into a broad market index fund. Then set a goal, maybe $10 per week or $25 per month. The amount matters less than consistency, because investing isn't about making one perfect decision. It's about making many good decisions over time. Starting with $100 won't make you rich overnight, but that's not the point. The point is building the habit, learning the process, and allowing time to work in your favor. Remember, every wealthy investor started somewhere. Many started with less than you think. The best time to start investing was years ago. The second best time is today. Your first $100 may seem small, but it could be the beginning of something much bigger.